It's Jack Snowden from Thomas Point Financial, and I'm coming to you from Quiet Waters Park in Annapolis, Maryland. About 2 miles north of here is historic Annapolis. About a half mile to my right or the south is the South River. Across the South River is Thomas Point's offices. And if you follow the South River down the shore to the east, you would come across the Thomas Point Lighthouse, which was the inspiration for both our corporate name and our corporate logo. I wanted to share some good news today. It's November. Why is that good news? Well, it's certainly nice that the holiday season will soon arrive and hopefully give us all the opportunity to be with friends and family. For the sports enthusiasts, college basketball starting, hockey starting, of course, football's in full swing. But today, the real reason I'm glad it's November is that it represents a seasonal shift from the weakest market quarter of the year to the strongest market quarter of the year. Yes, November and December typically lift the markets on average to be the strongest quarter of the year. The recent 10% pullback in the markets off the July 31st high was almost exactly the average pullback we have seen when we've had a solid start to the year through July. Specifically, the pullback in this situation after August 1st, before the end of the year, is 9.6%. And on October 27th, we hit a 10% pullback, technically a correction. And historically, after a 9% pullback, which started after August 1st, we see before the end of the year, the market recover fully from that pullback and add about 3.4%, in addition to what happened in the first 7 months of the year. Certainly, there's no way for me to know if this year will be like many in the past, where the total return between October 27th and the end of the year is 13% higher. I know that if we even saw 2/3 of that, it would be a solid return for many investors, and we'd look at 2023, I think, as a good year. As you know, currently there are a number of challenges in the markets, in the economy, in the world. We have 2 wars going on, sadly, in Gaza and Ukraine. We have above average inflation, higher interest rates than we're used to. And, some of our elected officials in Washington still can't agree on policies sometimes to move things forward. And while any of these could possibly throw a wrench into market dynamics, the markets tend to look past these troubles and they look at things I call market drivers, like the economy, corporate earnings, where inflation is not today, but where it is in the future, as well as interest rates. On these market drivers, 2023 has been solid. We've seen positive gross domestic product, including the third quarter, which was positive 4.9%, well above average. We've seen corporate earnings grow. The companies that have reported through the third quarter, on average, have seen 4.4% growth year over year. We're seeing inflation come down from 9.5% to 3.5% to 4%, and most likely we'll see interest rates follow suit if that trend continues. So again, I am happy November is here and that we're in a strong period for the markets. We're going to continue to monitor those things that can be troubling and difficult for both the economy and the worlds. And, we did want to also wish you a very happy Thanksgiving and holiday season, as we're very thankful for you. Now, P.S., if you didn't get a chance to take a look at the tug of war video that Eileen Snowden emailed you on September 14th, maybe now is a good time to look back at that, because the Annapolis Eastport tug of war is upon us, and you might have fun seeing how that turned out. Thank you, and have a great day.